Good evening. Please come to this chapter, Service Concession Arrangement. So, yesterday we discussed that the government will give the right to access to infrastructure to the operator. So, this guideline is applicable when the service concession arrangement meets the following features. The grantor will decide what are the types of services that must be provided, to whom it must be provided, and the price at which it must be provided. These are regulated by the grantor, and any significant residual interest in the infrastructure at the end of the term is controlled by the grantor through ownership, beneficial entitlement, or otherwise. So, who is the owner of the infrastructure? Grantor. Operator does not have ownership over the infrastructure. What are operators' right over the infrastructure? Paragraph next. The operator is given the right to construct. So his right is he can get access to that infrastructure. He can go to that road, and then on that road he has a right to construct, right to upgrade, right to manage the infrastructure. Okay, but he's not the owner of the infrastructure. Such infrastructure should not be recognized as property, plant and equipment, as this right is not an absolute right. This right is not an absolute right to control the use of such infrastructure. He does not control the infrastructure. Okay, he has only the right to construct, upgrade, manage, operate the infrastructure. This right is just a right to access on behalf of the grantor. So therefore, he cannot show that infrastructure as his asset. The arrangement is essentially rendering of construction or upgrade service. The consideration is given in the form of right of access to the infrastructure. So what government does? Government gives a right of access to the operator, and then operator does the construction or upgradation service on that infrastructure. Now what is the consideration that you will receive? The consideration that would be received would be in the form of a financial asset which is receivable in cash. So in some arrangement, government pays a certain amount periodically over a period of time. So this is the amount receivable from the grantor, and therefore it becomes a financial asset for the enterprise. Okay, right to receive cash. IFRS 9 will become applicable here, so that also we'll discuss today. IFRS 9, financial asset, right to receive cash. Consideration will be received in the form of cash. In some cases, in other cases, write down, it takes the form of intangible asset. What is intangible asset? Okay, you get a right to collect, either you can call it toll or user charges. And this right to collect toll or service fees or user charges is intangible asset. So government says, I will give you the right. Now you install the toll booths there. All the vehicles that will pass through this toll booth, you can collect toll. But how much toll they will collect, who will decide? The grantor. That means they cannot charge any amount of toll. It is with the permission of the grantor, and then this right will be available for certain number of years. So this right they will show as intangible asset. The license that they receive to operate, collect, toll, that license becomes an intangible asset. Okay. So now it depends on what kind of arrangement the grantor and the operator has entered into. Accordingly, either will follow financial asset model or will follow intangible asset model. Next line, construction or upgradation service. The revenue and cost should be measured and recognized as per IFRS 15. Okay, that is construction contract. So what are the services we are providing? We are providing construction service. First 2, 3, 4 years we are doing the construction or upgradation of the infrastructure, and then we provide maintenance service or operation service, upgradation service. In case of road construction, we may provide resurfacing obligations. So construction work which they do for first 2, 3, 4 years, so that is also a revenue generating effort. So this construction cost and construction revenue will be recognized as per our present standard IFRS 15 by applying progress of the work done. Okay, by applying the progress of the work done, they will calculate what is the fair value of this service, fair value of this construction, and accordingly recognize the revenue, recognize the cost. The consideration received or receivable should be recognized at fair value. The consideration received or receivable will be recognized at fair value and may take the form of a right to financial asset, which we discussed just now. The grantor will pay cash, a certain amount of money for a certain time period. This amount due is recognized in accordance with IS 32 or IFRS 9 or IFRS 7. And next is right to intangible asset. If suppose the grantor says, we give you a license and you can then collect the toll, fees, service charge, user charge, then this right will be shown as intangible asset. IS 38 will be applied, and because it is an exchange transaction, it will be measured at fair value. The intangible asset will be measured at fair value. IS 38 is applied for measuring asset acquired for non-monetary asset. You are rendering construction service. I will write CS, construction service, and you are receiving a right. So don't you think this becomes an exchange transaction? Both the standard IS 38 says intangible asset will be recognized at fair value in exchange transaction. This standard IFRS 15 says revenue in case of non-monetary transaction will be recognized at fair value. So revenue will be recognized at fair value. Intangible asset will be recognized at fair value. We'll pass the entry intangible asset account debit to revenue. Okay, at fair value. The revenue and cost should be measured and recognized as per IFRS 15 that we have discussed. The contractual obligation, if any, if any, to maintain or restore the infrastructure as per the terms of the arrangement should be recognized and measured as provision under IS 37. Okay. Now suppose this is a road. You have got a license for 20 years. But then the agreement says that after 12th year, you have to provide resurfacing of road or restoration of road. Restoration, because if the asset is used for 10 to 12 years, what happens? The road will get damaged. So you have to provide restoration service. So you have learnt in IS 37, in case if you have a liability, you'll have to make a provision every year. Because as the road is being used, an obligation arises to repair that road. So every year, I will have to calculate provision for repair, restoration and make a provision for that. So any provision will be accounted under IS 37. However, if the maintenance or restoration is in the nature of upgrade service, it should be treated as mentioned above. If the maintenance and restoration is in the nature of upgrade service, then we'll follow IFRS 15. Now multiple arrangement. Have you heard multiple arrangement? This is a complex discussion. No numerical question, only understand. If both construction or upgrade service, this is one service, or operations and operation service are performed under single arrangement, then consideration should be allocated on the basis of the relative fair value of the services delivered. Okay, like multiple element contract, if there are multiple performance obligation, then your revenue will be allocated over different elements on the fair value of the respective services offered. So allocate on the basis of respective fair values. In this business, that is construction business, as you know, there is a huge cost which is involved. What is that cost? Borrowing cost. Is it right? Who borrows money? Operator. If you get a contract to construct a road which will cost 5,000 crore, 8,000 crore, so what these companies do? They borrow money. So what is the treatment of the borrowing cost? Now it depends whether you are following the financial asset model or intangible asset model. So answer my question. If you are following financial asset model, guess what will be the treatment of borrowing cost? Yes, because borrowing cost cannot be capitalized over financial asset. It is not a qualifying asset. But if the output is intangible asset, you get a right, you get a license, then capitalize. Once the asset is substantially ready for use, up to that period, up to which period? Up to the construction phase. Once the asset is ready for use, capitalize. So which standard will apply here? IS 23, borrowing cost. For borrowing cost, IS 23. For intangible asset, IS 38. So the borrowing costs incurred are to be capitalized only if the operator has the contractual right to receive an intangible asset. That means he gets the license to collect the toll. Borrowing costs incurred during construction phase of the arrangement can be capitalized. Okay. Next is item provided by the grantor. The grantor may in certain cases provide other items to the operator for use in the construction or other services. This item may be part of the consideration payable by the grantor. Either the grantor may just allow you to use certain construction equipment or other service, or they may be as a part of consideration payable to the operator. These are to be recognized in the books of the operator at fair value. If the government pays consideration in the form of asset, construction asset, or any other service, then this will be recognized as asset in the books of the operator at fair value. Do not treat it as government grant, because this is not a government grant. This is just a consideration paid not in the form of cash, but maybe in the form of any other asset or service. Now the next part is disclosure. After disclosure, we'll take a problem. Okay. Disclosure requirements are very simple, but you have to just remember. Since you're not required to remember, you can just write on your own also. But remember, these are the disclosure requirement. In SCA, what is SCA? Service Concession Arrangement. In short, they are called SCA. The operator is generally granted a right and also is under an obligation to perform. What is the right? Right to access the infrastructure. Obligation to perform construction service, maintenance service, upgrade service, resurfacing obligation. For each service concession arrangement, the grantor and the operator shall disclose the following. A description of the arrangement. So you have to briefly describe the terms and condition, so this users of financial statement can also understand. Significant terms of arrangement that may affect the amount, timing and certainty of cash flow. And third, you have to disclose the nature and extent of right to use the asset, obligations to provide or rights to expect provision of services, obligation to acquire or build items of PPE, obligation to deliver or rights to receive specified assets at the end of the concession period, renewal and termination options, other rights and obligations. So basically what you have to do, all key terms and condition of your agreement, you have to disclose. Changes in the arrangement during the period. In case if there is a change in the arrangement between the grantor and the operator, and how the service arrangement has been classified. So whether you have followed the financial asset or intangible asset model, disclose. An operator should disclose the amount of profit, revenue and profit or losses recognized in the period on exchanging construction services for a financial asset or an intangible asset. So on one hand, you will recognize revenue from construction service. On the other hand, you will recognize a financial asset or an intangible asset. Plus, you're also going to recognize construction cost, so that profit or loss will be disclosed. Now, in order to understand how to calculate this profit or loss, let us write down one small question. Small question. Write down question. Heading write down service concession arrangement. Service concession arrangement, financial asset model. financial asset model. Right hand side, two columns, year and amount. Year and amount. Construction service. This will provide in first year and second year. You can write 1-2 if you want. And these are the cost you are going to incur. First 4 line is the cost that you will incur. 500 construction service in second year. 500 again. This is the cost you will incur on construction of that asset. In this example, it is a road which we have to construct. Then we have to operate it for 10 years, 3 to 10. 2 years will require to construct it, and you have the right to operate it for 10 years total. So means next 8 years. And you will incur 10 lakh rupees as operating cost. Road resurfacing. You have to resurface the road, repair the road in the 8th year. Amount to be spent 100. And then grantor would pay per year. So this is where you receive cash flow from grantor. 3 to 10. Amount 200. Amount 200. Now write down point number 2. Keep one line blank. All cash flows. Assume all cash flows takes place at the end of the year. All cash flows takes place at the end of the year. Rate of borrowing is 6.7%. Now we will assume that this construction cost you have incurred is out of borrowed money. Is it right? So if you want, you can write that also, that all cost incurred is out of borrowed money. Construction cost is incurred out of borrowed money. So no equity for the time being. Then write down point number 3. Question is not over. Why you are writing answer? You have to first find out what is the fair value of the services. So write down point number 3. The fair value of the consideration. Fair value of the consideration received or receivable. Service and fair value. Construction service. Fair value. Cost plus 5%. Operation service. Cost plus 20%. Road resurfacing. Road resurfacing. Cost plus 5%. So this is our revenue. This is the revenue we have to recognize. Okay. Because the government is going to pay 200 every year, I have to create a financial asset in the book. For that, once we create the financial asset, we have to also keep on calculating the effective interest on that. So therefore, in order to recognize the interest on the opening balance of financial asset, we need to calculate the effective interest rate, which is called IRR. Okay. So first you draw this table. We have to visualize what inflows, outflows that is happening, and accordingly we will compute the EIR, so that This financial asset that we will show after 10 years, its balance should become how much? The book value of that financial asset after 10 years should become equal to, come on, 0. All accounts should close. The account will close only if you recognize the interest as per effective interest rate method. You are getting more than what you have incurred. You are getting more than what you have incurred. So the difference is the effective interest. So first column write year, second column billing, third column receipt, net, and as you know, to calculate the effective interest rate, we will take one start rate, one end rate. EIR or IRR calculation in the classroom or in the exam requires this interpolation technique. Once you qualify, then you put an Excel sheet, type all these cash flows, write a formula, IRR in bracket, choose the column, bracket close, enter key, you'll get the IRR. Okay, have you done that in the office? Where? Project report. But they don't allow you in the exam. So you have to learn. So write down billing. How much bill we are going to raise on the government in the first year? Fair value of the construction service provided, 500 plus 5%. 500 plus 5%. 525. Second year also 525. Third year 12. Wait. What about 8th year? 8th year 12 plus, there is some resurfacing also. Just check how much was that resurfacing and what is the margin? 5 or 10? 5%. Let me check. Road resurfacing 100. Make it 10%. 100 plus 10, 110. Okay, so total comes to 122. Again 12. Now you see, the total billing on the government would be 1256. This is your revenue. But receipt would be starting from third year up to 10th year, 200 each. So I am getting more. I am getting more. So that means I need to also recognize the interest. And for that I require effective interest rate. So now write down net. 525, then 188, 78, 188. Now in the exam you have to make a guesswork. What would be the start rate or what would be the end rate? So approximately you have to guess 6, 7, 8%. Let us say we assume that IRR is 6%. So at 6%, year 1, 495.28 present value. How do you calculate it? I will tell you how to get it on your calculator. Type this number, divide by 1.06. Again type this number, divide by 1.06, 2 times equal to. Okay. Now wait a minute. This is 188 how many times? 5 times. So can I get the present value annuity factor for 5 years between year 3 to 7? How do you do it? 1 divided by 1.06. Press equal to 2 times. Then after that, press equal to m plus, equal to m plus, equal to m plus, equal to m plus, equal to m plus. Do this exercise 5 times and then press MRC function. You'll get some factor. Multiply that factor by 188. So how much did you get? Approximately. Did you get 704.81? Or if you have written separately, then also welcome. Okay. Now take on your calculator 78. Divide by 1.06. Press equal to 8 times. You will get around 51.87. 51.87 you are getting. Then you take 188 and 188 2 times. So I can tell you a shortcut. Type 1 upon 1.06. Press equal to 8 times. Then you press equal to 9th time m plus, 10th time equal to m plus, MRC. You'll get some factor, multiply by 188. You'll get approximately 216.26. Or you can do individual calculation also. Each year separately also. Yes or no? No. Neither you are saying yes, nor you are saying no. What should I assume? Huh? This is not right. 48.93. Okay, this is 48.93. Rest are right? Or you are checking? Check. This 51.87 is actually 48.93. Approximately what is the total? Just check. Huh? Around 7.47? Positive or negative? Positive. If it is positive, we'll increase the rate by 1% now. Take 7%. Start again. 525 divided by 1.07. Is it 490.65? Again press equal to. You'll get 458.56. Is it right? Learn to use calculator fast. And then next 5 times press equal to memory plus, equal to memory plus. Get the factor first. After getting the factor, multiply by 188. So once again I will explain. 1 divided by 1.07. Press equal to 2 times. Don't do anything. Third time press equal to m plus. Equal to m plus, do it 5 times. Then MRC. And you'll get some factor multiplied by 188. How much you are getting? Tell me. 673.28. Okay, 673.28. Then type 78 divide by 1.07, press equal to 8 times. How much this time? 45.4 something, no problem. Then all clear on your calculator screen first. All clear. 1 divided by 1.07, press equal to 8 times. Okay, 8 times. Then ninth time, press equal to memory plus memory recall. You'll get some factor multiplied by 188. How much you're getting? Huh? 197.83. Oh. What is the total you are getting of this last column? Around 32.7. Oh, that I have written correctly. 32.70. So maybe some typing error, or I don't know. How did we get it? 32.70. One is positive, one is negative. So you have learned if one is positive, one is negative, your answer is between 6 and 7%. So apply the formula, whatever formula you have learned, and get the IRR. So let me see who will give the answer. IRR will be equal to 6 plus 7.47. That is your NPV at 6% upon 7.47 plus 32.7 into 7 minus 6. So that is how you will get the answer. Yes or no? Yes. Finally, after so much of hard work, are you getting close to 6.18%? Yes. So this I will require for calculating the interest. Write down step number 2. Amortization of receivable. Amortization of receivable. Year write down. Opening balance. Finance income at 6.18%. Current year addition. Current year addition. Then write down receipt. Receipt. Closing balance. Now, there was a chapter which you have learnt earlier called IFRS 9. Okay. In that chapter, we have done the same exercise for financial asset and financial liabilities. And one more check we will do, that after 10th year, the balance will become 0. Let us see whether it happens or not. So now, year right 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Opening balance in the first year will be of course 0. So interest 0. Current year addition 525. Keep that billing in front of you. Billing and receipt from previous working. Receipt is 0. Closing 525. You start receiving money from the government from the third year onwards. So now write 525 into 6.18%. into 6.18%. $32. We will round off these figures to save time and unnecessary effort. Current year addition 525. You will add the three numbers and deduct the receipt. Receipt is still 0. So is it 1082? Yes, 1082, 6.18%. Check approximately rounded off 67. Current year addition will be how much now? 12 for operational services. Receipt will be 200. Receipt is 200. $961. Then 961. Check the answer. Is it 832? 832. Eight 51, 12, 200, 695. Now you'll complete the table on your own. Last year, what you can do, you can adjust the finance income. Is it right? Say yes. Check the answer in the sixth year. Is it 550 closing balance? Very good. What is the balance in the seventh year? 396 or 7? Welcome, welcome. Okay. Then what about 7th, 8th year? Anybody? Around 343 or 344 plus minus 1. Correct? Continue. In 8th year, have you written 122 or 12? Yes. 343. Around 22. 12. 200, 177. Now do reverse working. Receipt write down 200. Current year addition write down 12. And my opening balance is 177. So how much should I write here so that the total becomes 200? 11. 10 point? Okay, okay. So this is my finance income. Okay, that we'll recognize. Now step 3, write down cash flow. Step 3, cash flow, because this will help me to also calculate the borrowing cost. Since you have to find out your profit and loss figure, you need to calculate the borrowing cost. So write down year, receipt. This is purely based on inflow and outflow. Receipt means what you will receive from the government. Cost is what you will incur. And borrowing cost also you are going to incur, because that construction cost you are going to incur is out of borrowed money. Borrowing is at the end of the year. What is the interest rate on borrowing they have given? 6.7%. Okay. Net cash flow, cumulative net cash flow, and cumulative net cash flow. This will help me to also find out the borrowing cost. Now year, write down 1, 2, 3 till 10th year. What about receipt? Receipt 0, 0, and then 200, 8 times. 208 times. Construction cost was how much in the first and second year? 500. And then next 7 years, operating cost. 8th year operating cost plus resurfacing cost, 110. And 9th and 10th year, again your construction cost. What about borrowing cost in the first year? No, 0. Right in bracket, it is assumed borrowing is at the end of year 1. Borrowing is at the end of year 1. You can write that note somewhere below. Afterwards, you will think why we have written 0. So we are assuming borrowing is at the end of year 1. So you borrowed money at the end of year 1, you spend 500 at the end of year 1. All cash flows will arise at the end of the year. So net cash outflow will be 500. So this is your, you can say, borrowing 500. Your loan outstanding at the end of year 1 is 500. So now next year you will calculate interest on 500 at 6.7%, 34. So my net outflow will become 534 for this year. So my cumulative net cash flow will become how much? That is my loan outstanding in the second year. 500 incurred plus 34 borrowing also. So my total loan outstanding is 1034 into 6.7%, round off, around 69. Now my net cash flow will be 200 plus minus 10 and minus 69. So this year we have generated a positive cash flow of 121. My opening balance is negative 1034. So will the loan balance reduce? Yes, it will be now 913. 913 into 6.7%, round off, 61. Are we getting 61? Now check what is net cash flow of this year. Haji, 129. 129. 784. 784. Then 52 interest, net cash flow 138. 646 is right. 646. Again continue. 44 interest, approximately 44, 45, whatever you are getting. Check. Is it 45? Then net cash flow would be 140, around 146. This is 500 now into 6.7%, round off. 36. Okay, 34, 35, 36. Write something and move ahead. 154, 155, 156. Next, 346. Plus minus 2. Plus minus 2. Don't worry. You understood, na? Now write 6.7% of 346. Round off. How much is that? Is it 23? Net cash inflow 67. Balance 279. Into 6.7%. 17. Net cash inflow 173. Finally, last column, how much is the balance? 106. Is right plus minus 2 or 3? Plus minus 2 or 3 is okay. Because we are rounding off, so maybe. Now last year this is 5, around 5, just check. Seven, okay, right, 7. No problem. 7, this is how much? 183. And the balance left with you, cash balance left with you is how much? There will be some balance. This is what you have earned finally. Positive balance indicate this is what you have actually earned. So how much is your final income from this entire project? 78, 79, 77. Okay. Say yes. Yes. The answer is not over. Who will prepare a P&L account? You. So P&L account also will have to prepare. So as to see the really year wise how much profit or loss we are having. So in P&L account, which all items we are going to write? We are going to write revenue that we are going to bill, cost that we are going to incur, and borrowing cost, and finance income as per effective interest rate method on the opening balance of financial asset. And the difference is net profit. 2 plus 2 minus 3 minus 4 plus 5. That is my net profit. What should be the total of net profit according to you? Total of the last column. Can you guess? 77 or 78? What you have written in that cash flow column? Is it right? That is going to be my income. So first write down year 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Revenues write down. Where will you find these numbers? In your first table, billing. Revenues. Write carefully. And where will you write the cost? From where will you get the cost? Question. In the question, cost is given. First 2 year 500, 10, up to year 7, 10, 10. Year 8, 10 plus 100, 10 plus 100. And then 10, 10. Now write borrowing cost. Where will you get borrowing cost from? Previous working. Just go to previous working. Cash flow working note. Copy the borrowing cost column from previous table, borrowing cost at the rate of 6.7%. Is it there? Copy from there. As per your notebook, it should match. Not as per my answer, you should match with your notebook. And just check approximately it is matching with my answer in the range of plus minus 2. Okay. From where will you get that finance income? Second step. Write down second step. Effective interest you have computed. Step 2. Copy from your own notebook and just match with my answer. And is it in the range of plus minus 2? Check 0, 32, 67, 59, 51, 43, 34, 24, 22 and 11. Now your job. Simple arithmetic. Column number 2 minus 3 minus 4 plus 5. Let us see who will give the correct answer first. Do it carefully. First year 25. So these first 2 years we are actually recognizing as per IFRS 15 construction revenue, construction cost. Correct? 25, 23. Third year is 0. Fourth year is how much? 0. Fifth year 0 or 1. Sixth year 1 or 2. Seventh year 0, 1 or 2 is okay. Eighth year 14. Ninth year 5, 6 or 7 is okay. 5 or 6 or 7 is okay. Last 6, 7 or 8 is okay. Take the total just to cross check. How much total you have earned? 78. And you will see it exactly matches with your cash flow last line, last column, last year. That is the profit you have earned over 10-year period. Right. Now write down question number 2. That was financial asset. Now we will pass entries for intangible asset. Basic data same as above, comma, except the terms of the arrangement allow the operator to collect tolls from drivers using the road. To collect tolls from the drivers using the road. The operator forecasts it will collect toll of rupees 200. The operator forecast it will collect toll of rupees 200 crores. Yes, you can write lakhs. Previous question was lakhs. So this is also lakhs. 200 lakhs in each of the year 3 to 10. Now write down the operator capitalizes the borrowing cost as per IS 23. The operator capitalizes the borrowing cost as per IS 23. Risk adjusted discount rate. Risk adjusted discount rate as per IS 37 is 6%. Now where will this be applied? Now we are going to record intangible asset in the books. Okay. We have an obligation to resurface the road at the end of 8 years. Is it right? Resurfacing. Understand resurfacing. Resurfacing means you have to again completely revamp that road, bring it back to like original position. Year 1, year 2, 3, 4, 5, 6, 7, 8. Right. First and second year, up to this, sorry. First and second year, construction work is going on. But now from second year onward, the drivers have started using the road. So the damage will start from third year onward. Each year will assume equal amount of damage has been done. So my total resurfacing obligation is 100 rupees. Is it 100? 100 divided by 6. So each year, as the road is being used, I have to incur 17 approximately. I have to incur 17. My obligation is to incur 17, but that I am going to incur when? In the 8th year. This reminds you of one chapter IS 19. Employee renders service here, but he will be entitled to gratuity at the end of the period. So what will do? I will not recognize 17 liability here. 17 divided by 1 point is risk adjustment factor, 1.06. 17 divided by 1.06. And after how many years I am going to pay this? Not 6. Third year is over. Third year is over. So if you count now, it is 1, 2, 3, 4, 5. So this 17 will be paid after 5th year, will be incurred after 5th year. So 17 divided by 1.05, 1.06 to the power 5. So that will give me the present value of 17. Similarly, when I go to next year, again I have to incur 17, which will be paid after 4th year. So present value of this 17 I have to create. Then I go to 5th year, 17 divided by 1.06. This I will pay after 3 years. Like this we have to do. Since you are recording the liability at present value, you have to do unwinding of discount also. So every year I have to record two costs here. One, the present value of the resurfacing obligation, and second, the interest on the opening balance of the provision. So two more costs will come in this calculation. Is it right? So that also we will discuss in separate charts. First, let us understand the accounting. you are going to apply two standards simultaneously first 2 years, IFRS 15 and IS 38. You are rendering construction service to the government, correct? Government is giving you license for providing construction service. So there is an exchange of non-monetary item. Exchange of non-monetary item. IFRS 18 also says, in case if you render service and receive non-monetary item in consideration, it will be measured at fair value. So revenue will be measured at 500 plus 5%, which is the fair value of the revenue. And intangible asset, IS 38 also says, if intangible asset is acquired in an exchange transaction, it will be measured at fair value. So fair value of construction service is fair value of the intangible asset. Is it right? So first year will pass the entry intangible asset account debit 525 to construction revenue 525. Again second year intangible asset account debit 525 to construction revenue 525. And in second year one more thing I will do. I have incurred the borrowing cost on the opening balance of the previous year. That also I will capitalize. So intangible asset account to borrowing cost capitalize. So that will give me total value of intangible asset at the end of year 2. Now the asset is ready. Borrowing cost will not be capitalized subsequently. But then this intangible asset will be amortized over 8-year period. So we'll divide by 8. And that will give me the annual amortization of intangible asset. So in this case, when you are owning that license, your calculation will change slightly. Now you have to also record the amortization of intangible asset. And because you are showing the asset in the book, intangible asset, that resurfacing obligation will also be included in my calculation. So write intangible asset value at the end of year 2 and annual amortization right hand side rupees in lakhs. Point number A. Construction service in year 1 at fair value 525. B. Borrowing cost capitalized 34. And then construction service in year 2 at fair value 525. In the year 1 there was zero borrowing cost. Year 2 only borrowing cost was incurred, that gets capitalized. So what will be my capitalized value of intangible asset? 1084. Is it right? 1084. See, yes. Yes. Then write down amortization per annum. Amortization per annum over a period of 3 to 10 years. Amortization per annum over a period of 3 to 10 years. 1084 divided by 8. If question is silent, assume straight line, okay? Is it 135 rounded off? So this also I will charge to SOPL, Statement of Profit and Loss. 135 you have written? Right. Now write down next step to cash flow. Cash flow calculation. This time the receipt is in the form of toll revenue. Just let me see, is it the same like previous one? Just check yourself. Only thing is, this time it is toll revenue. Previous time it was the amount received from the grantor. Same. So just draw the format and write in the center, same as case 1. Keep the format ready, otherwise you will forget only. Given a choice, you will forget. Same as case 1. So borrowing cost will be calculated like previous one. Now write down step 3, resurfacing obligation. This calculation you will do when you are showing the asset, intangible asset in the books. Okay. This calculation you will not do when you are showing financial asset. So first year, second year, zero obligation. Why? Construction activity is going on. Then 3 to 8 every year, you write 100 divided by 6, round off 17, 17, 17, 17, 17, 17. Oh, the total is 102. Maybe if you want, you can make it 15 or let it remain 17, no problem. Number of years left. Now here the student can make a mistake. He can write 6, but no. This obligation is at the end of year 3. Expenditure will be incurred at the end of year 8. So if I count how many years are there between 3 to 8, then 5 years. 3 is over, na? Don't count 3. Count these numbers. 5. Similarly, if you count from 4 to 8, 4 years are remaining. 3, 2, 1, 0. 3, 2, 1, 0. Or one more trick you can follow, start in reverse order, 0, 1, 2, 3, 4, 5. Is it right? Now what is the purpose of writing the number of years left? Present value. Present value will be calculated at the risk adjusted discount rate. Okay, applicable to the company. So take on your calculator 17 divide by 1.06. 5 times equal to how much? 12, 13, 14, 15, 16, 17. Okay. 87 total. What do I do with that? Nothing. Okay, no problem. Because you are calculating the liability at present value, it will amount to unwinding of discount also, because here the total is coming to say 100. But here you have recorded 87, you said. That means there is interest. So next table, write down resurfacing obligation account movement. That means this is, you can say, resurfacing obligation account. Instead of a ledger, it's in the form of a statement. Opening balance, add interest, add current year, closing balance. Okay. First, write down the format. This you treat like a resurfacing obligation account. The purpose of this working note is to find out the interest on the opening provision, which will also be charged to profit and loss account. So write down, dear student, opening balance for 1-2. 1-2, 0, 0, 0, 0. Year 3, opening balance will be still 0. Therefore, interest is 0. Current year, we will pass an entry for resurfacing obligation 12. Closing balance 12. Opening balance 12. 1, 13, 26, round off the interest to the nearest whole number. Okay. 26 into 6%, round off to the nearest whole number. 2. Current year cost, this figure you are getting from which table? Previous table. 14, 12, 13, 14, 15, 16, 17, 42. Correct? 42 into 6%. 3. Current year provision, 15. Closing balance, 59. 7th year, 59. 4. 16. 79. Last year, you will reach around 100, plus minus 1. Okay? Because we are rounding off, the difference is going to be there by 1 or 2 or 3 rupees. Don't worry. Is the answer right? So these two expenses will also be shown in profit and loss. Is it right? Say yes. Yes. So how many items will come in P&L account? Visualize. Contract revenue, contract cost, borrowing cost, then operating cost, then this resurfacing obligation, interest on resurfacing obligation. So all these items now you bring together and prepare one small P&L account. Do we have a choice? Profit and loss. And then amortization of intangible asset also was there. So I have prepared a table. You can write like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 at the top. And all these lines below. Anyway, you can present. Write down year, revenue, construction cost, borrowing cost, resurfacing cost, present value of obligation, unwinding of discount, amortization of intangible asset, net profit or loss. Net profit or loss. Year write down 1, 2, 3 till 10. Now you write down revenue like this. First and second year you will get construction revenue. Intangible asset account debit to construction revenue. Intangible asset account debit to construction revenue. And then for 3 to 10, now you are showing it as an intangible asset. So this is your asset, you have to maintain it. So toll revenue will come as your income now. For providing these two services, you are given intangible asset. Construction cost 500, 500, 10. Write down remaining 8 times 10, 10. Do not write that 100 here. That 100 will come indirectly in the form of this column number 5 and 6. Understood? Borrowing cost. First year and second year I will write 0. Sir, why? Because first and second year, why we have written 0? It has been capitalized. It has been capitalized. Capitalized. Then third to 8 go to the table. Go to the table. Go to the table. Copy the borrowing cost from there and check it from my answer. Plus minus 1 or 2 rupees difference is welcome. 69, 61, 53, 43. Is it there? Resurfacing cost. Resurfacing cost into bracket present value of obligation. Go to the step number 3. You'll find these numbers there. 12, 13, 14, 15, 16, 17, 0, 0. Unwinding of discount. Step number 4. Check 1, 2, 3, 4, 5. Last two columns 0, 0. Correct? First, second, third year is 0 because first year there is no question only. The interest on this 12 will come in the next year. Will the discount amortization be written in the first and second year? Say no. No. Third year onwards. Third year onwards, how much will you write? I have prepared a working on that. How much was that? Was it 135? Yes. 135. Very good. And now my job is over. Any query on this? Anything which we have not considered? Anybody who completed the answer? Check the answer now. 25, 25. This is minus 27, minus 20, then minus 13, minus 6, 2, 10, 36, 48. And what is the total you are getting approximately? Same 78 or 79. Now in this example, I have also prepared one balance sheet. So write down balance sheet. SOFP write down. In some country they call it balance sheet, some country SOFP. How many years are involved? 10 years are involved. Intangible asset. Now you Imagine intangible asset account. First year will pass an entry intangible asset account debit to construction revenue account. Second year we will pass two entries in this account. One is intangible asset plus that interest borrowing cost. So you can see in your second step also that 1084 is there. First or second step. Is it there? Okay. And now you start depreciating it or amortizing it. So how much amount will keep on reducing here? 135. So you have to take your calculator and keep deducting that amortization amount of 135. 135. Keep reducing. Last year make it 0. Even though it will not be 0 because some rounding off is done, but because its life is over, so the value in the last year should be 0. What about cash balance? Cash in bank. First 9 year write 0. There was no positive cash. If you go to that cash flow table, the last year has a positive cash flow of something like 77 or 78 or 79. Is it there? Say yes. So therefore asset side total based on this limited data would look like this. Total assets 525, 1084, 949, 814, 679, 544, 409, 274, 139, 78. And then you write down liabilities. Equity and liabilities. Under equity and liabilities, write borrowing. So go to that cash flow table. That last column is borrowing. Minus figure. Last column, cash flow. Yes, 500. Then 1034. Then it reduces slowly. 913. 784. Is it there? From your own notebook. 647. 500. 346. 179. 106. And then it is not there because cash balance comes. So this becomes 0. Borrowing becomes 0. Substituted by cash balance here. And now you will write one more thing. Resurfacing obligation. Resurfacing obligation first and second year is 0. 12. Go to that step number 4 there, 4. And there is a closing balance of resurfacing obligation. 12, 26, 42, 59, 79. Wait. In the 8th year, you are going to pay it. So 0. Then you write one more item, profit oblique loss. In bracket I have written cumulative. This is SOFP. In SOFP, the retained earning keeps on accumulating. Okay? So go to the previous table, step number 5, and keep adding the profit or loss. First year profit was 25. Second was also 25, 50. Plus minus third year profit or loss. How much? So balance is 23. 23 or 24 is welcome. Fourth year, cumulative. This is SOFP. 9 or 3? 3. Fifth year. 3 and then plus minus the profit of the fifth year. How much? Anybody? Around 10 or 11 negative? No problem. Continue. Minus 10. Again sixth year positive or negative figure. Add or less. Balance. Come on. 16. 16. Negative 16. Continue. 14 or 15? Okay. Next, minus 4 or 5? Minus 4 or 5? 31 or 32? And 78. Then what is the cross check? The total of liability should match with asset side. Sometime it may not match because of rounding off by 1, 2 or 3 rupees. Okay. So see, the first year it is telling 525, 525. Second year is also telling 1084. Check third year. Is it telling 949? 940. Check the total. Is it matching? Tallied. Check everybody. This chapter is over. Okay. So write one note, the present value of resurfacing obligation will not be considered in the first model, that is the financial asset model, because the performance obligation is satisfied only after completion of resurfacing obligation. Only after completion of resurfacing obligation. In the first model, we are recognizing revenue. As and when the performance obligation is being satisfied. As and when the performance obligation is being satisfied. Okay, this answer is over. This chapter is over.